Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch this stock market update and industry sector review for the week ending Friday, February 2nd, 2018. Hard to believe it's February already. January was just a blur. Before we jump into the stock market charts, I'd like to begin with the quote of the week. And this is from Abraham Lincoln, the 16th president of the United States. So I don't think I need to go into detail of who this guy was. So we'll save a little time and jump right in. Abraham Lincoln once said, "Things may come to those who wait, but only the things left by those who hustle." Very wise words from Abraham Lincoln, 1809 to 1865. All right, let's take a look at the Dow Jones chart and see what the last week has brought us. We've had a little bit of volatility. As of Tuesday, the 30th of January, we had a 400-point down day on the Dow Jones. So a little bit of excitement this week. We'll see where it goes, but as of right now, let's just look at the charts and see where everything is. Here we go. Here we have the 6-month chart of the Dow Jones Industrial Average, but before I get into that, January 31st was a big day. We had the last day of Janet Yellen as the head of the Federal Reserve. As of the 1st of February, Jerome Powell takes the lead. But the interest rates were left unchanged on the 31st of January by the Fed, so we'll just have to wait and see what Jerome Powell has for us throughout the rest of 2018 and beyond. Now looking at this Dow Jones chart, still pretty strong. However, it was an interesting day on the 30th of January here. We had about a 400-point down day. Now, take into consideration that 400 points for the Dow is not what it once was, because the Dow used to be 12,000, 14,000 points, and now we're at 26,360 approximately, or 26,150 as of the 31st of January. But still, a 400-point down day was quite a eye-opener, and look at this. We actually had the price of the Dow Jones Industrial Average drop below the 5-day moving average. That's a strange occurrence lately, because you can see we had a little blip there, a little blip there, and a little blip there. But overall, for much of the past few months, starting on September 8th, the price here in black has been above the 5-day moving average. But the 5-day moving average in red may have topped. We'll have to see where we go the first week of February. But we have a little topping pattern on that. But right now, the 5-day moving average is above the 20 in blue, and the 20 is above the 50 in purple. So we still have short-term strength and intermediate-term strength for the Dow Jones Industrial Average. Here we have a chart of the S&P 500 over the last 6 months. Looks much the same as the Dow Jones Industrial Average. Nice uptrend that began on December 29th. And then on the 30th of January, we had a nice solid sell-off, and that sent the price of the S&P 500 here in black below the red 5-day moving average. So it's worth noting. We'll just have to wait and see, because the price has been above the 5-day moving average now for a whole month. But right now, the 5-day moving average in red is still above the blue, which is the 20-day moving average, indicating short-term strength. And the blue 20-day is above the purple 50-day moving average, indicating intermediate-term strength. So not much to be concerned with yet, but we'll just wait and see what the first week of February brings us. Here's the 6-month chart of the NASDAQ 100. Looks about the same as the Dow and the S&P. Nice uptrend began on December 29th, and then straight up we go. Topped out here on the 26th of January, and then on the 30th of January sold off some. Price is a little bit below that red 5-day moving average, but as of right now, the 5-day average is above the 20 and the 20 is above the 50. So again, short-term strength and intermediate-term strength for the NASDAQ 100. Here's the 6-month chart, or rather our first of the industry sectors, telecommunications. Over the last 6 months, been quite a roller coaster ride. And if I look back on this here, the telecommunications has gone nowhere for the last week. Just gone sideways. Had a little bit of a bump and then came right back down, but we're still exactly where we were. But the red 5-day moving average is above the 20, indicating short-term strength, and the 20 is still above the 50. But those two lines are converging, indicating some weakness on a longer time frame. But right now we got some short-term strength and a little bit of weakness, but still some solid strength on the intermediate term time frame as well for telecommunications. Here's the 6-month chart of the S&P 500 materials stock market, which is a lot of industrial companies. And it's been pretty much the same over the last week. If I look at, we're sitting right exactly where we were on about the 5th and 6th of January. So been a pretty flat month for materials. And you can see that 5-day moving average in red may have peaked and is converging on the 20. So we'll have to keep an eye on that. But right now, the 5-day moving average is still above the 20, indicating short-term strength. And the 20 is still pulling away from the 50. So we have intermediate term strength as well for materials. But we'll just kind of have to wait and see what February brings to this one. If it goes up, well, then we'll see if it does. If it goes down, then that 5-day moving average may cross over that 20 and give us a sign of weakness, but not yet. Here is the 6-month chart of the S&P 500 Information Technology Index. So we had a rally here that began on December 29th, and then up we go. And same story on the 30th of January. We had a sell-off and then a bounce on the 31st. So the technology stocks are right where they were over the last week. No change. Same price as we were on the 22nd of January. So we'll just wait and see. And that 5-day moving average in red is above the 20 in blue, indicating short-term strength. And the blue is above the purple 50-day moving average, which is intermediate term strength as well. Here is the Consumer Staples Stock Index. And we had a peak right here on January 26th, and then the next several days after January 26th were a sell-off. We have a pretty defined peak on the 5-day average here, and that price in black has fallen and is headed toward the 20. So we'll just have to wait and see, but as of right now, we still have strength on the short-term and intermediate-term time frames, but definitely some observation is warranted with a 4 to 5 day sell-off here in this consumer staples. But right now, we're still just getting started if it is a sell-off. Here's the S&P 500 Industrial Stock Index, and you can see it's been kind of in a plateau. We haven't made any progress since the 11th of January, just been a sideways move, and that just shows a lot of indecision. Not sure where it's going to go in February, but right now we still have short-term strength. The 5-day in red is above the 20-day in blue, and then the blue is above the purple, which is the 50-day average. And so we have short and intermediate term strength for industrials. But definitely a lot of sideways indecision there for the last several weeks. This is a rather noteworthy chart. This is the S&P 500 Utilities Stock Index. And when I talked to you before, we were about right here on this little peak on the 23rd of January. Hadn't really gotten to see anything exciting. It was just a punishing decline for utilities. However, we'll have to wait and see because we have the 5-day moving average has crossed above the 20-day moving average. And the price has too, as of January 31st. So we have the price in black popping up above the 5 and the 20, which is very interesting. Maybe a sign of something coming, but that 5-day moving average in red has crossed above the 20-day moving average in blue, indicating short-term strength. Now that's kind of a miracle since it's been since December 5th since that short-term strength went away. So it's been basically almost 2 months of punishing decline for the utilities stock. So we'll have to keep an eye on this one. We got a nice solid bottom on this utilities index, and we'll just have to see what February brings. But right now, there is some sign of life for the first time in 2 months. And the blue 20-day moving average is still well below the 50-day. So we still have intermediate term weakness on this index. Here is the consumer discretionary stock index over the past 6 months. And in prior videos, I called this the all-star of all of them because it has been a beautiful parabolic rise since August 18th, just flying faster and faster to the upside like an airplane taking off. It's been a beautiful curve. But in a prior video, I said, be careful of parabolic rises because they sometimes don't correct very pleasantly. Parabolic rises often correct to the downside very sharply. Now, this little blip here certainly is not a sharp correction, but it is noteworthy because the price in black crossed below the 5-day moving average on the 30th of January and 31st, and we may have a topping pattern forming. We'll see. But right now we still have short-term strength, red over blue, and intermediate term strength, blue over purple. So we'll see what the first week of February brings. Here is the 6-month chart of the Dow Jones Financials Stock Index, and same as many of the other ones, we had a rally that began about January 2nd, shot up here to the top on January 26th, a slight sell-off here on the 30th, and a little tiny bounce on the 31st. We still have short-term and intermediate-term strength here, but the price did fall below the 5-day moving average, so that is worth noting and keeping an eye on. But it is only been a couple days of a tiny little decline here, so we'll keep an eye on it. But that 5-day moving average in red may have formed a top, so we'll see where we go February 1st and 2nd and beyond. But right now it's still a lot of indecision. It hasn't gone anywhere since the 22nd of January. Here's the S&P 500 Energy Stock Index, a little more volatile than the others. We had a very beautiful rally that began on November 16th, and then it was up and up and up faster and faster. And we hit a top here on January 22nd, went sideways for a few days, and then on the 29th, 30th, and 31st of January, it was down, down, down. So some profit taking potentially, but the price of the energy stock index in black has cut through the 5-day average and the 20-day average pretty quickly. So something to keep an eye on. Definitely sign of some weakness there. The 5-day moving average in red has definitely appeared to have peaked. So we have what appears to be some short-term weakness coming in the very near future when that red line crosses the blue, which is the 5 and the 20-day moving averages. So we'll keep an eye on that. But the blue line, the 20, and the purple line, 50-day moving average, are still well above each other. So intermediate term strength for energy. It's just a short-term situation that we have forming here. Here's the S&P 500 Healthcare Stock Index, and this is rather interesting because it did kind of have a parabolic vertical move here that began on January 23rd, and then it was just up, 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 and then it hit this top up here on January 26th, and then boom, it just came flying down due to some earnings in companies within the index that didn't work out too well. So right now, sharp rise and then sharp sell-off for healthcare, and the price is below the 5-day moving average. But we don't have a top yet indicated on this red line, the 5-day average. So we'll see. But right now we still have short-term strength and intermediate-term strength for healthcare stock index. But this sharp sell-off over a couple days definitely is worth noting. Here is the 6-month chart of the Dow Jones Real Estate Stock Index. And again, these are commercial real estate portfolios, companies that own lots of commercial real estate. And you can see we had a top up here on November 13th, and then a sell-off, and then a rally on December 18th, and then it was just down, 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 down until January 18th. Had a bounce, and then we came back down here to January 30th, and on the 31st of January we had a nice solid bounce as well. Lots of indecision since it really hasn't gone anywhere since the 9th of January. Lots of volatility down here in the bottom. But that 5-day moving average in red is still not looking like it wants to cross that 20-day average in blue. So short-term indecision or weakness, whatever you want to call it. And that blue line, which is the 20-day average, is still below the 50-day moving average in purple, indicating still a significant amount of intermediate-term weakness for real estate. Here's the 6-month chart of the US dollar index, and in the past couple videos I had indicated where we were going, and you can see that the decline still looks pretty significant. You could pick this top up here November 3rd, or you can pick this top up here December 12th, but especially since December 12th, the US dollar has been rapidly losing its value against the euro and the yen and the yuan and other world currencies. And if I go back out, well, first of all, before I do, you can see the red 5-day moving average hasn't bottomed yet. It's still just kind of hanging out down here. And there's the 20-day moving average in blue and the 50-day moving average in purple. So we have a lot of short-term and intermediate-term weakness for the US dollar index. And in the prior videos, I showed you a 10, 11-year perspective of what the US dollar index looks like, and I'll do the exact same thing for you right now real quick. You can see that going out to 2008, we had a high here in the value of the dollar index on June of 2010, February 2009, and November 2008. And what I was watching for last week was to see if the dollar started to close, the dollar index started to close in value below below the tops of these three. And if you look at where we're at, we started to close inside of this tallest one. So we'll see. Right now the dollar does look pretty weak, and if the dollar index starts to close every day below this high of 08, 09, and 2010, then there's a good chance that it might keep going lower and impacting the value of the dollar, but also impacting inflation and the price of the cost of things that we buy every day. If the dollar's getting weaker, it's going to take more dollars to buy the stuff that we buy every day for our families. Thanks again for watching this market update and industry sector review. I hope you found the charts and information useful. Before you go, please take a moment to click the subscribe button on the YouTube channel and then click the little bell next to that button so that you'll be notified whenever I post additional videos. Also, if you use Facebook, LinkedIn, or Twitter, please take a few minutes to look up Christensen Wealth Management there and like or follow those social media pages. That way, during the week when I'm not making these videos, I can send out information quickly through other sources so that you can be informed of additional information or very timely information when it becomes available. Have a great day and have a very enjoyable February 2018. Bye-bye.